Is it time to take a closer look at renting versus owning? Here's a look by the numbers. It's getting cheaper to rent in Canada, with average rents ending 2024 down 3.2% across the country to a 17-month low of $2,109. Houses and townhomes fell the most by 7.4%, followed by condos down 5.2%. But prices vary wildly across the country. Average rent in Ontario was $2,332 at the end of the year. It was $2,487 in BC and $1,718 in Alberta. Home sales, meanwhile, are expected to keep climbing. CREA is forecasting an increase of 8.6% this year, as 532,704 properties might trade hands, and it expects an increase in price of 4.7%. That would send it to a national average of $722,221. So are you better off renting? Some analysis from Zoocasa suggests that in many Canadian cities, that is a more affordable option. They compared a typical mortgage, assuming a 25-year amortization with 20% down and a rate of just over 4%. In Vancouver, a similar home that rents would be $3,031, but would require a mortgage payment of $5,404, meaning renters would save $2,373 or 44%. In Toronto, those savings would be $1,924 a month. Cities like Winnipeg, Saskatoon, and St. John had more modest gaps between owning and renting. There are, of course, other reasons to own a home, especially building equity in it over time. And there are additional costs to owning it, too, like maintenance. But there is a reason 65.5% of Canadians own their home as of the 2021 census. It's often the best way to get the place you want, if you can afford it. Shaun Cathcart is Senior Economist and Director of Housing Data and Market Analysis at CREA. Thanks for being with us, Shaun.
Sure thing, Amanda.
So it does seem as though, given what housing prices have done and the market has done, that it's a reasonably optimistic outlook you're offering up for next year. It's pretty decent sales growth on top of what has been a reasonably robust market.
Yeah, I would say that, but in some ways, I would argue that in some ways it's kind of conservative. I mean, it's not that far off our forecast for a recovery year going all the way back to 9 months ago, when rates were expected to sort of come down over 2.5 years. Now we're coming in for a landing on interest rates in time for this year's spring market. And the major assumption underlying this forecast, and it's tough because it's something that's very hard to measure, but it's that, you know, the 25 to 35-year-old cohort in Canada is the biggest cohort of people ever. They make the younger baby boomers who were on the podium for so many decades look like nothing. And we've had 3 years now, I think, of record immigration. I mean, like, you know, if you look at the numbers from 2023, 1.25 million people. And none of that's been playing out in our data or in the new home sales data. So where is it? It's all on the sidelines. But ultimately, you talk to people and they still want to own homes. They've been waiting for rates to come down.
Right.
Canadians love their 5-year fixed rate mortgages. And so when's a good time to take one of those? When rates hit the bottom. So we do think a lot of demand's going to come off the sidelines this year.
Although we've seen, so far at least, and will it change, as rates came down, prices have gone up. In other words, the affordability hasn't changed, just your ability to finance it might have shifted a little bit, but the price has gone up. So you're not saving anything. Do you expect that to continue?
Well, if you look at the numbers we released today in our forecast, and I did a press conference on it where I elaborated on the monthly trends, prices are already going up everywhere except BC and Ontario. So it's really BC and Ontario that have been sort of holding everything back already from us saying, wow, this market took off as soon as the Bank of Canada started cutting rates in the summer, and some markets even before that. And so, but, you know, buyers coming back into BC and Ontario as well. You know, it might be a year or two to absorb inventory before we start to see price growth there as well. But there's already enough places right now, and including at the national level, where this is already happening. It's not a forecast that this is going to start up in April of this year. We're sort of, I think the national average price is in the last 3 months was $700,000, and it was $670 to start last year. Right. So that trend is already underway.
Shaun, so good to have you. Appreciate your time today.
Anytime.
Shaun Cathcart, Senior Economist and Director of Housing Data and Market Analysis at CREA. Well, as more rental stock gets built, these prices should keep coming down. So does that change the picture on housing, or will single-family home ownership still be the goal for most? Daniel Foch is Chief Real Estate Officer at Valery.ca. Thanks for being with us, Daniel.
Thanks for having me.
So why don't we start right there? We do see renting becoming a little bit more affordable, still way more expensive than 5 years ago, but getting better. Does that change the story for people in the housing market at all?
It does in a couple of ways. I think that landlords are seeing increasing pressure. There's more and more supply on the market. Rents are coming down. Now we know property taxes are going up in the city of Toronto and probably in other municipalities across the country. And so it would be reasonable to assume that you might see some of that supply, that investor supply that's no longer economical for them to hold, making its way into the housing market as well. So I think we probably have continued downward pressure on price and rents for the foreseeable future, and more affordability on the horizon for owners and renters.
And so on the housing front, if that creates a little pocket of potential sort of room in the market, what we've seen so far is as rates have come down, so your mortgage gets more affordable, the house prices have sort of gone up at the same pace. So affordability overall didn't change much. But will that still help the housing market, do you think, as we head into the spring here?
It's tough to say. I mean, the factors that you just described are a little bit less binary than I would love to imagine. There's other competing factors like a recession, rising unemployment, wage growth being another one that's a really key factor for that affordability, because affordability is also a function of interest rates, house prices, and the income that an individual makes. Mm-hmm. I would say that all of those factors have kind of given a little bit of affordability to buyers and renters. So again, prices have come down, rates have come down, incomes have come up. As long as that picture continues trending in the direction that it has, we could continue to see affordability. If you start to see it breaking a little bit, for example, if house prices did move up, which they kind of tend to be a little bit here and there, and tough to say whether or not that's seasonality, then you might see affordability worsening maybe in the shorter term. It
was interesting to see in the CREA data, almost a warning, it felt like, to homeowners and buyers not to think there's going to be a massive spike up in home prices. In other words, people that made a killing on their house in the last 5 years, it may not be repeated because we may be at or near a top still. Would you agree with that there's not a huge upside for this market?
Yeah, I think, when you see a lot of volume coming back in the market, which we're seeing right now, people are buying houses again, people are selling houses again. And the reason people are buying is because they can afford to. I think a lot of people want to think about, or they want to be optimistic. They want to say house prices are going to go up, but that's actually the last thing that we should really be wishing for in this country, in such that the consequences of unaffordable housing market is the economy that we've seen over the last couple of years. People don't have a lot of money to spend at businesses. They're really feeling the pinch. People are taking on more and more debt. Whereas if you have a market that's balanced, where buyers and sellers can afford to enter and exit, we start seeing a increase in residential investment again. People are maybe spending on renovations. Real estate professionals are doing transactions, and so they're making money. And we know how real estate professionals love to lease cars and take vacations and all of those things. And so hopefully we can get back to a higher level of volume, like CREA is suggesting, mm-hmm. without actually seeing that materialize in an increase in price. I would actually say that would be the best case scenario for 2025's real estate market.
We've all got seconds here, but we do, of course, still expect more homes to be built. There's a big push for that. Does that suggest that we may even see housing price weakness in the years ahead?
I would say so, and you're seeing more and more rental supply being added, record rental housing supply as of today. So I think that's definitely a big headwind on house prices growth as well.
Daniel, always good to have you. Appreciate your time.
Thank you.
Daniel Foch is Chief Real Estate Officer with Valery.ca.